Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is July the 8th, 2024. I hope you had a great weekend. I know I did, but we were back to work here Monday morning. So let's take a look at the Chicago wheat futures charts. I'll show you three charts, three different time frames. We'll look at the monthly, we'll look at the weekly, and we'll look at the daily chart to give some perspective of where we are in the price cycle. The first chart here on the screen is the monthly chart of Chicago wheat futures. It goes way back, all the way back to 1970. And you can see since the breakout of prices in 2007, we're actually forming and consolidating above the previous highs. So often previous highs become previous support, and maybe the new high, the old highs are the new lows, and that's almost what seems to be happening on this chart here. Will that continue? Well, remains to be seen. I don't think commodities are subject to inflation. However, that's open for debate. But take a look at today's price here. We're trading at 571 on the nearby contract, and that's been a significant level. You can see starting back in 1973, that's where the high was 1974. 1974 high was about the same price level. 80 got close, and then back again in 1996. Interesting times for Chicago wheat. It seems to be a very important level. Since then, we've traded above that level, times considerably higher than that level, and we've been finding resistance around that 1080 mark, which is interesting too. I'm fascinated with the charts and the price action we find on these different commodities and different securities where price has memory. And you wouldn't think that the market conditions of 1996 would be similar to 1974, but that is where the price found resistance at the previous highs in 1974, and the same thing happened here in 2022. Price again has memory. We got back to those 2008 highs. Buyer or seller stepped in, the market came down rather quickly from that point. Take a look at this though here. We are trading below the purple 50-month moving average, and the 50-month moving average is starting to decline. The prices tested it, got rejected, and came back below it. The 50-month moving average is starting to decline. Let's look back in history when that's happened before. We can go back to 1997. And we saw about a 30%, 33% drop in the price. Don't quote me on those numbers. Those are estimates, but that's how much it dropped in price. And then obviously we saw that back in 1990. Similar conditions, went from 360-ish down to as low as 260. Lost about $1 a bushel there. So if we extrapolate from that past history, can we anticipate another 30%, 32%, 33% drop in the price of Chicago wheat from here? It's been done before. Will it happen again? Well, we need to stay tuned and keep an eye on that, but don't dismiss that possibility of that happening. The weekly chart is interesting to me too. You can see here the price in May, the May rally found sellers at the 200 week moving average. We anticipate that, and that's what happened. Does it happen all the time? No, but it's interesting. You want to be aware of those moving averages. I don't base my trading around them, but I'm certainly aware of where they are at all times. Right now we're trading below the green 50-week moving average, which I am never bullish on the long term or intermediate term when I'm trading below a declining 50-week moving average, which is what we have here today. The daily chart, again, a little more wiggles and squiggles on the daily chart. And again, it's interesting to me too. Here, the purple line is a 200-day moving average, and we can see how that's been acting as resistance. Buyers have stepped in, pushing the price down, keeping it from going above that price. Can it get above there? I feel it can, but we need confirmation before I develop my strong conviction that'll happen. This thin, light blue line here, you can see if you zoom in, you can probably see it, but that represents the anchored volume weighted average price from the year to date, and we're trading below that metric. So we'll just zoom in here. You can take a look at that. We're trading below that metric. That value is currently sitting at $6. We're at 570 at the moment. Why is that level important? If you are a hedge fund, or if your performance is based on year-over-year performance, and your measuring stick starts on the start of the year, start of the calendar year, January 2, January 1, and you're below that average, you're underperforming the market of that security you're trading in, or that commodity you're trading in, and you're likely not feeling good about your position. So are you going to stay in that position and hope that gets back above there, or are you willing to sell your position and reduce it and cut your losses and move on? My name's Trent Klarenbach, sunny in Saskatoon. Life is good.